Yo, what's up guys? In this video I'm going to be showing you a simple forex scalping strategy that you can use and you can never lose a trade again. I'm just kidding guys, forex trading is risky and all I'm about to teach you right now is going to improve your forex trading. Actually, I'm really serious. It's going to increase your level of winning. You are going to get a 95% win rate if you can follow this strategy I'm about to show you. Now, what I'm about to show you is something that the institutional traders use, and it is called an order block. Most of you have been hearing about it, but in case you don't know about it, I'm going to share some few knowledge about it with you. And the little knowledge that I'm going to share with you, you might improve on it and begin to make your personal money off of it. Now, this is Australian dollar versus the United States USD dollar, right? So what you have to do now, in case you have not liked the video, go ahead and smash the like button and subscribe to the channel. There are lots of free stuff on this channel. It's a new channel for new beginners like you, and there's a free Telegram channel group below. It's a free signal group, and also is a group where I drop some training that you can learn for yourself, so you can be earning money while you learn. So stay tuned as I walk you through the steps. All right, so you might be asking, what is an order block? Now, understand this. Most of us, we are fond of trading based on the basis of support and resistance, right? That's what we are really used to, right? We are used to trading using support, basic support and resistance, right? But what if I tell you that there's a better way for you to do it? Will you be happy? Guys, please like the video in case you have not liked the video. Okay, so like what I've been saying now, most of us, this is what we know how to do. We also know how to draw trend lines. We also know how to draw trend lines, right? Some of us know how to draw trend line very well. But do you know all of this stuff? They are really good, but most of them don't really earn you the money that you really want to. Am I correct? Have you not been doing support and resistance before? You have been trading support and resistance by going to the 4 hours time frame and going to the 1 hour time frame and looking at the long bias and going back to the 15 minutes time frame for entry. Most of you have been doing this. But what if I tell you that as you can see, what if I tell you that there is a better way to do that? Meaning there is a game changer for what you are learning right now. Now, what you are seeing on your screen now, you are seeing this. This is a bearish resistance. This is a resistance, right? And as you can see, price came and began to bounce off of it. Now, you see this in the 15 minutes chart. When I drew it, I just drew it blindly based on the retail support and resistance level. And look at it on the 4 hour time frame. When you see this, this is an order block. I drew this on the basis of institutional trading. All right, so this is one thing that you should also learn for yourself if you must really make money trading forex. These are the easiest way for you to make money trading forex, so you don't want to miss out. That in case you have not joined the free channel below, go and join me below. And in case you have not subscribed, can you please smash the like button and subscribe to the channel for more free tips, right? So let's go to the 15 minutes time frame. I'm going to use it for an example. No, let's go to the 1 hour time frame just to show you some example. Now I'm going to clear my charts, of which I have done right now, and we're going to zoom out Let's zoom out. All right, here we are. Let's go to the current price. All right, let's zoom in again. All right, so I think we are set. So I'm just going to use this for an example, just to show you what an order block really is. Now let's go back and begin to backtest some of this stuff. Now basically an order block is placed for the sale or purchase of a large number of securities. Order blocks are sometimes used for the sale or purchase of more than 10,000 shares of the same stock worth of fixed income security. All right, now you must understand that an order block is also known as block trade. That's something you must know. And take note, I'm not the originator of I'm not the founder of order block. The founder is from ICT. That's the owner of ICT. All right, so all credit goes to him, to Michael. All credit goes to him. Now I want to share with you what I know, all right, and what I know that it has been working for me. All right, so look at this area. Let me begin to show you some real example on the live charts, on the chart. Now, an order block basically is the candle, that the last candle that is responsible for either a push up, or a push down. Either for a push that is responsible for a push up or for a push down, just like what you are seeing on the screen. Now let me explain further. Now this is an order block. For this example, like what I just explained to you right now, this is an order block. We are seeing an order block here. This is an order block. All right, so let me see if I can remove the background. Let's make it. All right, you see this? So basically this is an order block. This is an order block, right? And we can see a little order block right here also. Let's see, I don't know if I can. We're also seeing a little order block, another order block here. This is an order block, and this is an order block. All right, so I'm going to explain more to you. Now this form of trading seems to be very profitable. Now this is more like, it's not like the retail support and resistance, but rather you can put it this way, that this is the support and resistance that the bank use. But I'm just kidding, the banks do not use support and resistance, because they have large money that they use for trading. But you and I, we don't have that amount of money. We are just beginners in forex trading, and we don't have that amount to trade. Now how then can we really make money off of this forex market? And that's why I'm making this video. Now since we don't have money to move the market, now understand, retail traders can move the market, but if they are much, and it's going to be on a temporary basis. But the major market movers are the bank, the companies, and so on, the central banks and so on, right? So those are the major market movers. And who are these people? These are the people that take trades in this particular level. This area can also be called a liquidity area. All right, so as you can see right here, let me draw this order block to this particular level. I just want to show you something real quick. Now you see this particular area, this area right here, this is what is called a stop hunt. All right, a stop hunt. Now what these banks are doing, this big company that has a lot of money to, that has a lot of money to move the market, what they are doing, they are pursuing your stops and my stops. They don't want us to make money from the forex market. They don't want us to gain from the forex market. Now how then can we gain from the forex market? This is where this concept really comes in. You need to understand it more. To understand this concept more, guys, you just have to subscribe, join the free Telegram channel. You are going to get a lot of training on that. And also I'm going to be sending free signal or forex signal groups on a daily basis on based on this concept, so that you can be making money with Forex while you learn the concept. All right, so if that sounds like something that you love, like this video, subscribe to the channel, comment below, share this video with your friends. That's very important. It helps the YouTube channel to grow. And also lastly, join that free Telegram group. All right, so now this area that you are seeing here is actually a storm hunt. Now what they do is, as you can see, people, retail traders tend, like what most of you know, even you that is watching this video, what you might know before you know, you are always told that always trade with the trend, right? And these banks, they know that the retail traders, that's what they are most likely to do. Hence, they are going to chase your stops. Have you ever been in a trade where, for instance, you've seen, for instance, this big candle, because you've seen this big candle now, or you say you want to buy, then you placed a sell, and you were aiming that the price will get to this level, and you see that you place a sell, and the market went back up. Have you ever been in that state before? And have you ever been in a state where, for instance, now you see that the market is now going up, all right, so you say, oh, the market is going up, then you take a buy, and boom, they took you out. The price hit your stop loss. Have you ever been there? Now look at this is the reason, and this is the reason why it has always been so. The reason is because you do not understand this concept yet. Now, as you can see right here, price came down from and crossed the order block and went back up. It came down again. What these banks are trying to do, they are trying to target us. They are trying to get us out of the market. They are trying to make sure that we don't make any money from the market. They are trying to make sure that our stop loss is being hit. They are trying to make sure that wherever we are taking our trades, so they will take us out of the market. So now this is the little secret, guys. I'm telling you guys, if you can implement this, you will see that your trading pattern, your trading behavior is going to change. All right, so basically what you can do now, what you can see right here, price came here and it went back up, and it came here, it hit our order block, and boom, it shoot back to the top, right? So how then can you be able to identify this level? How then can you be able to make sure that you are not being stopped out? And that's where the use of the order block really is. All right, so actually in this video I just want to show you the little concept based on this order block, right? So for instance, let me zoom in again so I can show you. For instance, let me clear my chart. All right, so this was the last candle that was responsible for this move. Do you agree with me? All right, so you can see a bearish candle here, but we're not going to use that. Why? Because this one is really huge, right? And as you can see, there's another order block on here. So by right, this is the one that best suits it, right? So this is an order block, is the last bearish candle that formed, that moved price to the upside. So just have to put in something like this, a little box like this, so you can identify that it's an order block, right? So what we expect is that price is going to bounce off of it and gets to this level and push back up. Now there's what is called inefficiency and imbalance in trade. Now this is this particular area here, and that's why price came here and bounced off. It could not reach this level. Why? Because there was imbalance in the market and it has to be filled. And another thing to take note of is this particular level. Now look at it very well. Now this concept is somehow something that you need to take time and learn. All right, so this is an area to consider also, because if you notice that this was the major candle, the last biggest candle that was really responsible for the upside move, right? But we're going to pick this particular one, because if we want to enter a trade, let's assume we want to enter a trade right here. Let's assume we want to enter a trade here. the stop loss will be too high. Let's calculate the stop loss. Now look at the stop loss. The stop loss will be too high. That's about 27 stop loss, and that's far way too much, okay, for a scalper like you. All right, so if you don't want to scalp, you want to swing, then good, that stop loss is not really bad. Okay, so basically this is what we can do. All right, let's see this. Let me remove this so you can understand it better. Okay, now look at it. Price rallied up and it came back down. Now the last candle that was responsible for this push down is also called an order block. So for this area, where is the order block? Let me give you 1 second. All right. All right, this is the order block, right? This is the order block you are seeing right here. So since this one is a weak candle, we can use this next one, this previous one, as our order block. You see that? So what we expect is that price will come and bounce off of it and push back down as we've seen right here. You see that? So in case you don't want to be missing any of this move, this is something you need to learn. You need to understand this, right? And this is how I give my signals. This is how I give my signals. You want to join for free. Link is also in the video description. Subscribe to the channel to learn more strategies and so on. All right, so this is an order block, and notice this. Let's extend this order block and let's see. I already explained to you why this thing that looks like consolidation, that looks like this distribution area, and so on, you know. So price came, as you can see, after price came down here and it stopped many retailers out and it went back up. The thing that is now a buy, so they bought and it stopped them again and so on, and it came back here and finally the price pushed back up. Now if you notice, the area that the price pushed back up is the area of the order block. Can you see that? So from here the price pushed straight to the upside. There was an impulse move from this particular level. There was an impulse move, boom. Now this one is a smaller one. What about this one you are seeing right here? So let's extend our order block. You see that? You see how powerful this strategy is. So price came to this level and we allow price to come to this level, and price crossed it. Why? Because it wants to stop some retailers off of the market, and finally boom, price moved to the top. You see that? So this will be how many pips if we are to calculate this now? Let's do the calculation together. Let me zoom. All right, let's do the calculation together. So imagine that you've taken this trading in particular. Let's see. Let's zoom. All right, you see this? Wow. So this concept really works very well. You see that? Let's see. That's about how many pips? Okay, let's calculate it from this level. Okay, in fact it's too much, I don't know. Let's see. This was really an impulse move. Okay, let's just take it as a buy. Let's assume we enter the trade. Let me zoom in so you can see it better. So let's assume that you enter the trade at this particular level. We are going to assume, and look at it guys, just look at it. And let's say our stop loss is going to be placed around here, somewhere there, based on these lows that we're seeing here, right? So you see our take profit would be to first target would be to this particular level here, which is that's 44 pips. While second target would be to this level, which is 68 pips. while our third target can now, let's see, in fact, you see, so if you can really hold the trade long enough, you see how far the price went to about 116 pips. So just imagine, guys, if you can trade this based on this other block stuff. Now there are lots of things you need to learn, guys. You need to learn. So subscribe to the channel so you can learn more on whenever I bring more videos on this particular topic. Now look at where the current price is now. You see this? Now can you identify the order block? Now what we are seeing here is that this is an order block. This is the order block here, this huge candle. So by right, most of us might likely not to take this trade. Why? Because this candle is too big. Okay, this candle is too big. And what you can do, there could be a modification if you have mastered this strategy. Now if you notice, this candle, this bearish bullish candle could not engulf this bearish candle. Let me show you. This bullish bullish this bullish bearish candle, bullish candle, this green one did not engulf this red bearish candle, right? So what we can do is we can do some modification, but understand, you need to understand the system first. Do some modification, and that could be our order block that we need to take trade from, right? And it's going to reduce our stop loss drastically. So let's assume we just have to enter the trade here. Let's assume we place a buy order here, that once price gets to that point, and we are going to see that it is going to increase the way we trade. So from today, if you can master this, let's say 10 pips, right? 10 pips, and our target is, our final target is this, let's say is this level, 10 pips. Just imagine you are risking 10 pips to get about 53 pips. That is about 5 to 3 risk to reward ratio. And you can see price came right here and bounced off, and hopefully it's really still going to go up, right? So this is a very simple strategy you can really use to make money online using forex trading. So this is a scalping strategy you can use, and you can also use this as a, as an intraday trader. All right, so guys, I hope that you've learned that concept, you really enjoyed it, you've gotten at least one thing. In case you've learned something, please don't forget to support the channel by liking the video and by subscribing. All right, so you can join the free Telegram channel group. The link is also in the video description. Thank you very much, guys, for watching. I remain your boy EO Godwin, CEO. Now making 40 pips per day is really simple. Now go and watch this my video. You are going to see what I am just telling you that is true. You are going to see live proof, live example. That's what you are going to see right there. Not BS, not any bullshit. It's a live example. So go and check it out yourself and see for yourself. Alright, so thank you very much for watching. I remain your boy. Thank you very much for subscribing, for joining the Telegram channel, and for liking the video. Peace.